Good evening, ladies and gentlemen. Today is the 11th of May, and first of all, I hope all of you are staying safe during this entire COVID situation as things keep getting worse. And I think for the foreseeable future, I will be working from the home office as well. So, that being the case, today was an all right day in the market. Overall, managed to return about 0.5%. We opened with a lot of negative sentiment coming in from global markets. US markets were down, futures were down, Asian markets were down. I think overall we outperformed all of them by quite a bit today. We opened gap down, and I was afraid that the number of longs that were in the system, potentially we could see massive long unwinding. Something that became very evident in the first half an hour is the kind of strength that was displayed at the 14,800 and 14,700 put option. 14,800 became the maximum put side open interest, and I'd shared this as well. I shared the view that downside below 14,800 is very limited. I shared this on Twitter. You can follow me on Twitter at Bandi Shreyas, and Ravi and me as well on Nifty BN, so at Nifty BN. And we do keep sharing certain data points from time to time. So yeah, overall, wasn't expecting too much downside. So I took a strangle, which was partly bullish. But one thing that I did not anticipate was the kind of call side IV expansion that would take place once we started to potentially break towards the upside. That's basically where I got burnt. My calls expanded really quickly, and by the time I could get out and re-enter from a slightly lower spread, it was a little bit too late. All said and done, was still a decent day. I think should have been all right. Slight management errors from my side, but I think considering that tomorrow's an expiry, was able to manage the entire day and close in the green. So if you want like in-depth analysis of which point I made what change and why, you'll have to go to the Telegram group where on a daily basis I share my entire trade book. So I've done this for a few months now. Every day I share my entire trade book. You can go through it and probably study it more in detail if that is what you want to do. Thank you so much for watching this, and I will catch you tomorrow for the expiry trade. Have a great day.
Want to meet like minded traders and discuss option strategies, adjustments, and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. Looks like due to global cues and negative sentiment across US markets, US futures, and now Asian markets, we're opening gap down. There should be a lot of long positions in the system, so we might see this gap down lead to a further panic sell off in the morning. And yeah, that being the case, I will not be in a rush to short the IV right after the open. So we're opening somewhere around 14,800, and today being a Tuesday, one day before expiry, since it's a Wednesday expiry, we're opening somewhere around here. We might see a further dip all the way till here, test this range, and I'm expecting this range to sort of hold at 14,700 above, but would not be surprised if we saw a dip all the way till 14,600. Regardless, the idea will be to not exactly enter at the IV spike in the morning. We'll see what the reaction is in the first three candles, and based on that can decide when to take entry. Okay, looks like not too much of a dip from 14,800. So the position I'm going to be taking is a 400 points triangle, 14,600, and I'm going to buy 14,000 put and 15,200 for margin. I'm going to sell yesterday's high there about of 14,950 as the call. Okay, convert this. So to those wondering, I use this terminal by console coder. I got it made to be able to place orders faster and or easily. I still place it at smaller quantities because yeah, I place smaller quantity orders so that I don't face slippage. It uses the Zerodha API and hmm. Okay, so I have just finished entering the position for the day. It's good 350 points triangle, which is trading at slightly over 40 at this point of time. And yeah, what gave a lot of confidence is the fact that we didn't see a dip right after the gap down. and that indicates that those with longs are not really in a rush to unwind. And yeah, now the only I'm not fearing too much of an up move given current global sentiment, but considering that these calls are trading extremely cheap, an up move would rapidly expand the call side I do. So regardless, the idea is to not do too many adjustments. Our calls sold are here, just towards yesterday's range, and our puts sold are all the way here towards the support zone. We start heading higher towards start breaking above day before yesterday's high. So we start heading above 1850, then we'll have to probably move up our puts. And if we start breaking down below 14750, then we'll have to, which is basically 3 days back the close, then we'll have to move our calls down. Yeah, for now we have a relatively delta neutral, partly delta negative position. Okay, had to move up the puts and delta neutralize the position at 14,800 because we are now seeing an up move. So not much selling pressure and some kind of an up move. And basically, I have not. This is still a delta negative position. I have to take into consideration that the calls are actually gaining in value now. Also made a slight error. I exited the calls while trying part of the calls while trying to exit the puts. So anyway, call side now slight expansion due to the up move. Looks like we are defying global cues for now at least. Also, to people asking me how do I get out of a position in case something goes really wrong. So this is an order that I've set up. So these are two orders that I've set up in case I want to get out. This is if I want to get out really quickly. So I'm placing 19,800 quantities at once. I can buy back, or I can also place 9,900, or I can place 4,950. I can even set this up to exit all 55,000 at once, but there'll be big slippage from doing that. I'll eat up the liquidity and get a very bad deal if I do that. So this can get me out in 2 clicks if I want to get out. So yeah, idea is more or less okay. Let us be delta neutral around 14,800. I'm expecting yesterday's highs to hold, given that global markets are down between 1 to 2.5%. I don't see 15,000 being taken out at a time when sentiment is not supporting. So yeah, moved in our puts gives us a higher potential reward also, and helps us balance the calls for now. Okay, so far what it looks like is post the gap down, there's actually strength in Bank Nifty and Reliance. Um, and IT isn't really weak either. That is the preliminary understanding of what's happening. The options data will only become clear after 10:30, but something that's evident is there's put unwinding only above 14,900, and at all levels below that there is um, actually some form of addition. These 14,500 puts that you see unwinding is and 14,400 puts that you see unwinding is not because of weakness but because of strength, because these are being unwound and moved higher. So people are unwinding the 14,500 put and moving it to higher levels like 14,600, 14,700. So to put it quite simply, this is how we look at it. 14,150 and higher, all these calls are being unwound and moved lower, right? Because now 14,000, sorry, 15,000 is going to be that big barrier, which people are thinking will be a boundary. So this unwinding is once again because of short strengthening at 15,000. This unwinding is because of longs strengthening above. So all the way till 14,800. This 14,700 is probably what is looking as the preliminary boundary at this point of time. 14,700 to 15,000 is the potential expiry range if data right now is to go by. So our position is quite all right, except for the fact that a big up move can spook out these calls. I'm going to wait for us to head above 14,860, 870 before moving all of these puts to 14,700 and moving uh, these calls up to 15,000. So that's more or less the idea for now. Okay, so moved up the puts to 14,700. Um, this was basically also moved up the hedge, but basically did around 952. So if you want my full order book for the past 2 months, I've shared my entire order book every day on the Telegram channel. You can find it there. But basically, what's happening is we're seeing a lot of strength from 14,700 and 14,800. So that being the case, um, I don't want to wait for a situation where these calls start to explode in case there's an upmove. I'm preempting that by moving the puts up higher right off the bat. So the 250 point range, currently data neutralizes at 14,825. Time is 10 o'clock, and so far we are outperforming every single global market from the open. Time is 10:48, and we have more or less had a completely sideways day. I'm sorry I can't show you the charts. I'm using a different computer to do it, but there's not a lot happening. One thing that's very evident is a lot of put writing happening at 14,800 and 14,700. If you see from the put side, 14,800 is now the maximum open interest, and from the call side, it's 15,000. So the downside risk seems very, very limited with a kind of almost 40 lakhs at 14,700 and 50 lakhs plus at 14,800. Stuff like this I tweet out. So you can follow me at Bandi Shreyas. You should also follow at Nifty BN. So both Ravi and I, we keep putting up data as and when it's available. We don't exactly give calls. We're not in the business of giving calls, and we'll never be in the business of giving calls. In fact, we don't sell anything. We do all this for free. But yeah, you can follow us here. And yeah, currently, the idea is downside should be limited, and the broader range for the expiry should be 14,800 to probably 15,000 as a ceiling on the upside. We might dip at some point below 14,800, but I think most likely the expiry range is 14,800 too. So you can see where I've plotted here as well, just tracking different open interests intraday. And this has more value the closer it's to expiry, since expiry is tomorrow. It has more value now. So 14,800, 15,000. It has a lot of interest built up, and the premiums are not very high. So when premiums are not very high and you see this kind of open interest at certain levels, you can start considering them boundaries. Anyway, time is 10:49. We'll keep you posted. For now, the range is perfectly all right. And at this point, we're trailing stop loss, and considering that tomorrow is the expiry, we might lose almost another 10 points from here is quite possible. Okay, so a little bit of a misstep. Basically, what has happened is the view was more or less on point that 14,800 as maximum put side open interest most likely will be defended. But the upside move really exploded these calls. The 14,950 call expanded in a matter of, I would say, a minute. So much quicker than what is manageable. Expanded all the way from 28 or so all the way till 48. So basically almost doubled, and had to get out of that. And there was a massive call side IV spike. So moved out of that and shorted the 15,000 call. Kept the puts at 14,750. And yeah, at this point, during the call side IV expansion, took quite a bit of damage. I think it was like 10 points in almost an uncontrollable manner. I had to exit from the calls, and yeah, exited at quite a bad price. So yeah, can't do too much, but still, I mean, overall, I think this range of 15,000 will be protected, uh, given that it's the call side maximum open interest, and there isn't exactly any trigger to lead to further short covering. Yeah, massive short covering up move, calls almost doubled, and now more or less expecting us to say sideways in the range of 14,800 to 15,000. So now, because of the IV expansion, this trade remains all right to hold. From here, I'm basically trailing a 5-point stop loss, which will put us at a 1% exit in case we have to take a exit for the day. Okay, so basically after the up move, I had moved the calls to 15,000 and kept the puts exactly where they were, because there was quite a high value in them. One of two things would have happened: in the calls would have lost value, or puts would have lost value, and what's happened now is more or less the puts have lost value. They were trading at around 32 despite the up move. We were testing 14,800, but sorry, 14,900. But what I'm finding is that the up move is actually being used as an opportunity to sell the 14,900, 950, and 15,000 call. And I'm not expecting some kind of an up move. So I'm not moving my puts to the maximum open interest, which is 14,800. I'm staying below it. More or less, the idea is this 250 point range that delta neutralizes at 14,875 is perfectly all right for now to hold, and don't need to be doing any changes to this. Um, More or less, will continue to trail in with the 5 point stop loss till the end of the day, and not expecting too much upside beyond 14,900. Whatever short covering had to be done, I think, has already played out. So to keep you posted, the time is 11:40 almost. So we have 2.5 hours left to go, and expiry range looks to be 14,800 to 15,000, with high probability of it being 14,800 to 14,900. That's what I would go with at this point of time. Okay, the time is 2 o'clock, and more or less the put side IV spike has been managed. And now what I'm expecting is a potential up move above 14,850 will lead to an explosion in the rate at which these calls get covered at 14,900 in case we hold, because then because once again what we're seeing from the open interest front is increasing open interest. So at its low, this went up to 42 lakhs, and since then we've seen 4.2 lakh open interest added at the 14,800 put somewhere. So people want to sell this put basically in the price range of 50 to 60. That is the preferred price at which they want to sell. Now the calls, of course, did gain slight value once we took support, but these are potentially going to explode in case of an up move. So what I've done is I moved away the calls and moved away the puts also. Into the last 1.5 hour, the idea will be okay. So we're 1 point down now, and last 1.5 hour easily with this range, we should be able to capture more than that. And we don't want the call side IV spiking to catch us off guard by having a relatively high risk position by holding on to these calls. These calls can easily gain 15-20 points in a matter of 15 points move on the Nifty because of how they're priced right now. Okay, so last minute we're seeing a slight up move below beyond 14,850, and yeah, overall whatever the calls are expanding is being balanced by the puts. At this point, I have a mark to market stop loss of 50k, and I'll just exit if we start heading to 50k. I have the exit orders also in place. 30 minutes to go till we get auto squared off, and in at that point we're just going to keep trailing the mark to market profit by 50k. So more or less should have been an all right day. My biggest issue was the fact that I was expecting 14,900 to hold, but the rate at which shorts were covered at 14,950 really burnt me. So this is what really messed me up for the day. And then on the reversal, the put expansion that had to be managed was a little annoying. The market should have been all right, but the rate at which we moved um, required certain risk management. Overall, I think it's okay to just end on a green note considering the mishap that happened. I think if I just stuck to my view and been a little less aggressive in hedging the fact that I had sold puts, instead of selling the 4950, I should probably sold the 15,000. Would have been a better outcome overall. But hindsight is 2020, and yeah, we'll keep you posted. Um, Expecting just like further unwinding of certain positions, long option positions into the last 40 minutes or so. Okay, good enough time to start exiting, and I'm going to have slippage, and I know it. Not expecting too much of a further fall off from here, which is why I am exiting. Whoops. Kind of missing my setup. Don't like having to work with a mouse trackpad. I have another computer that. Oh, I see the issue. All right. Why am I doing this in sets even though I can exit the whole thing at once to avoid slippage? Okay, done for the day. Closed slightly less than 0.5% in the positive. Wasn't a very difficult day, I would say, to navigate. Should not have been a very difficult day to navigate. But the issue was to do with the fact that we got played by the short covering. When these 14950 calls exploded, doubled basically in a matter of seconds, it was not quick enough to react to that. And then on the reversal, once again, the puts bled. Should have been an all right day if you just had a short straddle at the open and left it as is. But I think at some point the call side expansion would have pushed you out. A lot of things that I could have done better. I think preempting the upside move, definitely given the strength that was seen at 14,800 put, should have been something I should have done. But yeah, it was an all right day and in positive, so can't complain. I will catch you tomorrow for the expiry. Thank you so much for watching. Have a great day.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.